Good morning, good afternoon, good evening, wherever you're watching this from in this wonderful world of ours. It's Saturday, the 20th of February 2021, and I'm sitting here with my glass of wine and all ready to give you a little bit of a rundown on the markets. So gold, silver, cryptocurrencies. We're going to take a look at uranium as well, and one or two other bits and pieces as we go through. So just before I launch into all of that, just to remind you that you can click on the link on my YouTube page here, sign up for our free weekly newsletter, which covers precious metals, uranium, cryptocurrencies, and all sorts of things commodities related. So and also to mention, of course, that you can find me on Twitter. So it's at North Star Charts on Twitter. Again, there's the link for the free newsletter there, which comes out once a week, with contributions from myself, Patrick Karim, Jeff Clark, and Steve Penny. So yeah, it's all free. So just go ahead and click the link. So moving straight on to the chart for gold. Now, I've had people asking me on Twitter and on YouTube to give some hints and tips on charting techniques as well. So I'll try and do that a little bit as I go through. When you look at a chart like this with a price of gold, you can look for support and resistance levels, and certainly looking over the last few months, you can see there's a horizontal line of support and resistance in here where the price has come down and tested. It was a resistance line here where price failed to pass through it, and then it was a support line when price sort of dropped down on top of it and then bounced off it. So it was a resistance there and it was support here. And at the moment it's acting as support. Price has come down and bounced off it in November, and it's done it again last week. We're also in a descending channel with one little blip where we tried to break out, but that was a failure. And we came back down and we're back to where we are now. And you can also see that I've put an arc on here. Now, these arcs, when they cover time periods of days or weeks, aren't particularly reliable. This one's been stretching out a few months, and it's probably going to be a little bit more reliable as we go forwards. And the larger arcs that stretch over time periods of years, as you'll have seen on my charts on Twitter, do tend to be much more reliable. I'm not claiming they work all the time, but they're a very useful tool and a useful guide. So when they don't work, it's not the fault of the person that's drawn the arc, whether it's me or whether it's you or somebody else. It's just that it's a guide like anything else, and you have to take all the evidence and put all the evidence together before you decide which way you think the price is going to go. It's a useful tool to help us. So we'll be watching the price of gold as it sort of moves in towards this point here, which is later on in March, where the channel and the uptrending arc kind of meet. So what we want to see is a breakout, of course, and that will confirm that these chart patterns are indeed valid, and we can look forward to some decent gains ahead. If price breaks down at this point, then we have some trouble ahead. Not to put too fine a point on it, but we'll be keeping an eye on that, or I'll be keeping an eye on that for you and posting on Twitter. Looking at the silver chart, it's more bullish looking really, because it's broken out from its descending trend line. The arc has supported it all the way up, and we're getting quite close towards the top of the arc with less in the way of resistance between here and $30. So it's much more positive from a silver point of view. It's been behaving as I would expect, and price actually came down and tested the rising trend line and the arc at the same time. They sort of coincide at this point, and that line held, which is reassuring and makes me think that the chart supports that I've put in on the arc there are valid. So we'll see how silver performs next week, of course, but it's all looking fine at the moment. The dollar index holds the key to a lot of this. You'll have seen the discussions perhaps between myself and Norvast on Twitter, and he's a cycles expert who fully expects the dollar to be moving upwards over the coming weeks, months, and indeed years. So his expectation is for the well, you can see this sort of black arrow trending upwards is for the dollar to move upwards in that general direction. This red box is what holds the key, of course, and we've been sort of range bound in this box for quite a period of time now. The lower support line of this red box is 88.25. So we if you're going to be bullish on commodities and gold and silver, you need the dollar index really to break below 88.25. That's not because you have to have a falling dollar for gold and silver to rise. You don't. I mean, gold and silver can rise even if the dollar index is rising. But if we don't break below 88.25, it implies that a 3-year cycle is underway from a higher starting point than back here in 2018. So that would mean this is the first 3-year cycle, and then we're entering another 3-year cycle, which is going to again be trending upwards, because it would mean that this 2018 point was the low point. So whether you followed any of that or not, regardless of whether you followed all that, I'm trying to explain, but perhaps not particularly well, is that 88.25 is a key level for particular reasons that as a gold and silver bull, I really want to see the dollar index moving below that level. It's really interesting to see that this apex of the triangle coincides, broadly speaking, with the cycle low. And you'll notice also that I've got the chart scale set to a linear scale. I haven't selected the option for a log scale. That's because this is an index, and as an index it shouldn't move in a logarithmic fashion for any long period of time. So it should always move between certain ranges, and it shouldn't suddenly shoot up to 2,000 or 5,000, for example. It should stay within reasonable limits. So we tend to use the non-log scale. I just need to bring that line down a little bit, don't I? Because it's not quite where it needs to be. I think it needs to be about there. And this line needs to come back a bit. Like that. So you can see that if price does descend down, then it'll be passing the apex of the triangle, which would be interesting. It'd be interesting to see whether price bounced off the apex or whether it just continued down through it. We'll have some of our answers, I would say, in the next 6 to 8 weeks, when we find out whether 88.25 is going to be broken to the downside or not. That's about as much as I can say on that. You know, we've got $1 cycle here, $1 cycle here, and we're only in the third dollar cycle since we came off the gold standard. So any conclusions that you draw about these cycles have to be sort of taken with a little bit of a pinch of salt. For example, the fact that the dollar has a 15-year cycle. Well, does it, or is it a 16-year cycle like gold? Because whenever I try and put the cycle low points on here, they're not exactly 15 years apart. So for one thing, I would question whether the dollar cycle is 15 years. Is it in fact 16 years, along with the gold cycle, which is approximately 16 years? I think the best thing I could say at the moment is that both cycles, the US dollar and gold, are approximately 15 to 16 years. And it's not until we have more of these cycles going into the future that we can make some much more definite conclusions. But the way the US dollar is going, we might not get too many more cycles going into the future, but that's another story. Moving on to another piece of the jigsaw puzzle. This is the Swiss franc US dollar chart, which I started following many years ago. And you can see that there's a repeating pattern here where we're in an uptrending channel, and as gold price bottoms out, so does this ratio. And you can see most recently the ratio bottomed out just a few years ago, as gold did. So the expectation is for the ratio to follow this blue dotted line and to peak somewhere around about 2027, marking the next peak in gold price. So that's about as much as I can say on that, except that since I first posted this chart several years ago, it's been doing exactly what I forecasted it would do. So at this moment in time, I've got no reason to assume any problems with it. Okay, so let's take a look at uranium. And first off, we'll have a look at UR Energy. I could have picked any of the uranium miners, to be honest. They're all doing much the same thing. So we've broken above long-term resistance, and we've been trending upwards over the last several weeks or even months, in fact, going back to the back end of last year. We've broken above this long-term resistance line here. We've built out a bull flag, which brought price back down to the resistance line in the classic back test, and now have been moving upwards in an expanding wedge pattern. Traditionally, these expanding wedges are ultimately bearish. They break to the downside, so it wouldn't surprise me at all if we had another upside surge and then a rapid sort of breakdown that brings us all the way back down to test this breakdown line again. Who knows? I mean, that would be a big drop, but expanding wedges like this, well, clearly they're unsustainable because the top line just kind of runs away far too quickly to the upside. So we'll see what happens with that, as with all of the uranium miners. But at the moment, I mean, since I first started sort of charting this at the breakout back here around about 70 cents or something like that, we've moved up about 300%, nearly 250%. So it's been a nice gain so far. So it's good to lock in some profits if you've been in it since the start. Just be a little bit cautious. One of the reasons I'm cautious on uranium, sip of wine while the chart's loading, is the very nice, is the spot uranium price. And we've seen over the years that spot uranium has been in decline, all the way down to, I suppose, 2016. Since 2016, we've been in an uptrending channel. We've broken out through the long-term resistance line back in 2018, and we've broken above horizontal resistance level, which is around about the $28 to $29 level. But unfortunately, we've been unable to hold $29, and we're back down to $28.60. So it makes me feel nervous, because without spot uranium starting to pick up in price, then the gains in the uranium miners are perhaps a little bit unsustainable. But you can see how the stochastic indicator is bottoming here, and it may well be that we see a fairly quick upturn, and I'd like to see a breakout above this resistance line here, which is somewhere around $29.50 at the moment. So if we can get above that, then we'll be targeting the upper trend line somewhere above $35, between $35 and $40 at some point in the future, and then it's a case of trying to break out above the channel, of course. And when that happens, then it really is going to be fireworks in the uranium sector. So that's where we are with uranium at the moment. Looking at some of the cryptocurrencies, I could have picked any of them here, really. You'll have seen my Twitter feed in recent days, and a lot of the altcoins are breaking out. And this is one called the Graph, or GRT. It's up around about 13% so far today. We've got quite a few sort of decent gainers today, a few of them moving up quite nicely. And the target for this one is around about $4. It's broken up above sort of a resistance line here. It's formed a bullish descending wedge pattern. It's broken out, and I'm expecting an upside move. One thing to look at, of course, though, is the ratio chart. So when you're trying to decide whether to be invested in sort of Bitcoin or Ethereum, for example, the bigger players, or whether it's better to have your money invested in some of the smaller so-called altcoins, the thing to look at is the ratio charts, and they tell you which is performing better in relation to the other. So you can go onto TradingView and you can get the ratio charts for all of these things, and this is the GRT to Bitcoin ratio chart, and it works just the same way that any other technical chart does, and it's built out a bullish pennant formation over the last few days. So you can see that we've now broken out of that pennant formation, we've back tested it, and we're moving up. So the way this ratio chart works is that if the graph is moving upwards, if the line is moving upwards, then you're outperforming Bitcoin. when it's descending, then Bitcoin is outperforming whichever of the altcoins it is that you're looking at. So I could pick another one. Don't know which one to pick really. We'll pick Link, shall we? Chainlink, and see what's happening with Chainlink. Glass of wine. Another sip from the glass. So let me just zoom out a little bit so I can get a bit of perspective on this. So here we go. I'll just adjust the scale for you. And looks like the support line may need adjusting a little bit. So it's hard to tell whether you've broken below support or whether it's just the support line needing readjusting, but might also help if I change from a 2-hour chart to perhaps a daily chart. It takes away some of the noise. Some of these moves are just spikes on the candles. I'll just expand the chart for you so you can see what we're looking at. Okay, yeah, so as I thought, it's a lot of these are just wicks on the candles. So what we've got is what looks to me like a bullish flag or triangle setting up. We've moved up, then we're sort of seeing the ratio bounce around between these two lines. So I'm expecting a resumption of the uptrend and an upside breakout here, just purely because this is a bullish pattern. The chart sort of entered the pattern in bullish mode, and then it's come back down, and it's sort of compressing between these two lines. So I'd expect an upside breakout, which basically means that Link is going to outperform Bitcoin, or is more likely to outperform Bitcoin going forwards over the next few days. So I just draw on the sort of thing that I expect for you. It would be something like that. As always with these charts, you have to watch what happens with the support line, because if we do get a more decisive breakdown, then you need to sort of reassess your forecast, of course. So none of these forecasts are set in stone. They're all working on the basis of probability. So I'm working on probabilities here, and it's more likely to break up, but a downside move is not impossible. Okay, so so take a look at the ratio charts and use them to help you decide, when to shift your funds from some of the sort of smaller coins to the larger ones like Bitcoin. And whilst we're here, we'll just take a little look at Bitcoin, because that's the big daddy of all of these, I suppose. So we'll take a look at Bitcoin, and then we'll call it a day, I think. So let's have a look. Bitcoin to the US dollar. And I've set a target of $60,000. It's a measured move from the breakout. We've achieved around about 57,500 so far. Price is moving up steadily towards that 60,000 target. Just zoom out a little bit, you'll see my long-term chart for Bitcoin. Okay, so needs to be on the log view as well. That'll make more sense, won't it? Bear with me whilst I get the chart to center. Okay, so there we go, making a bit more sense now. Another sip of wine. Right, okay, so there you go. So there's the arc. A lot of people didn't believe this when I first drew it, but it's when we got that bounce there that the arc became sort of fixed in position. And you can see the trend line here. When we broke out here at around about $9,000 was when I posted on Twitter that I was absolutely certain that we were going to see a substantial move to the upside. And of course, we've moved from $9,000 to $57,000. And looks to me as though we're heading up towards this point here, this resistance line, somewhere around 110,000, 120,000. Perhaps in the sort of time period around about May time. But more on that in the Silver Chartist newsletter. So if you want to read all my notes and all my thoughts on that, sign up for the Silver Chartist newsletter. As I said right at the very start, it's all free. I'm going to bid you farewell with my glass of wine. Thanks for watching. Thanks for listening. And as always, have a great weekend.